Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 14 September through 18 September. As always, the top-notch channel is about the Thrift Savings Plan, TSP. We also talk about Roth IRA and brokerage accounts. How do we do this? We talk about the funds. So for TSP investors, Thrift Savings Plan, we talk about the C, S, I, and F fund. For those in Roth IRA or brokerage accounts, we talk about IVV, VXF, EFA, and AGG. You might wonder what these things are. Basically what these are is these funds equal each other, and what they are composed of is this fund here is the S&P 500, this one here is small caps, this one here is international markets, and this one here is bonds. We kind of do a general overview of the funds, do a little market analysis, and then do a technical analysis, and then show you guys where our funds are allocated. If you're in the Roth brokerage accounts, these ETFs are great to follow, and if you're in TSP, these are the ones that you can follow here. So let's dig right into the video and get into what we have. First things first, here's what we had for the week. Very, very interesting, as you can see on our charts here from TSP Talk, which is a website, great talk website you can look into. Charts did not do this well this week, guys. As you can see, for the week, we were down in the C fund, we were up on the S fund, and we were up on the I fund. So two of our stock funds were up while one was down. I'd like to mention for the year that we are beating all markets. We are on top of the markets. We are beating all funds in the top-notch channel. Our overall return this year is 8.5%, while the top fund for TSP and the markets this year is bonds, surprisingly, at 6.8%. But we are double the amount of the S&P 500 right now, or the C fund, double the amount of the S fund, and almost triple the amount of the I fund, or international markets EFA ETF. So we are doing extremely well in the top-notch channel. If you want to learn more or learn how to do markets and look into markets, please like, subscribe, or share this channel. Would really appreciate you guys subscribing or liking the video. Let's move into some other charts. So some other things I want to show you guys for this week include the charts, what they look like for the week. So as you can see, we started this week off really well with the CNS fund gaining close to almost 2%. This fund was almost 4% for the week, which is incredible gains for 1 week on the S fund. We saw that taper off on Thursday and Friday, and we saw the C fund actually go negative. I fund was able to stay above, and F fund was just about even. So that was really interesting for our funds for the most part. Another thing I want to show you guys, which I think was really interesting, for trend lines. Now this was actual price. Now let's move to trend lines for the S&P 500 or the C fund. Really, really interesting. When you have a bull market, you want it to look something like this, with price on top, the fastest moving average on top, and the slowest moving average on the bottom. Very clean looking chart here. As you saw in March, we dropped right through that. What has happened since? As you can see, the market's really consolidated in here. Had a nice rally coming up here. Moving averages were kind of all over the place. We're getting back to this look here, so that's very interesting. The thing is we're not seeing this cut right through the moving averages like we saw in this last correction here. As you can see, it's staying above that fastest moving average, to be determined. But even if it gets in these moving averages here, that's not a game shopper or a game stopper for the S&P 500. Really want to see it move back to exactly what this is for a bull market. Haven't seen it just yet, but we are getting close. These moving averages are getting back in line to where they need to be moving forward. Let's move into our next chart. The next chart we have is we're going to start going over the technical analysis of our video, kind of a short video this week, so let's move right into it. The first chart we'd like to look at is IVV. For IVV, let's take a look at that. This is the C fund, or the S&P 500. As you can see, we had some real technical damage. I feel like some technical damage done this week. As you can see, that we are now below the 50-day moving average. As before, early September, we touched it. That's really good, where it's kind of like basically a point where we didn't cross it, and we kind of bounced off this 50-day moving average. Now we are below that, and the longer we are below the 50-day moving average, the worse, the more significant it becomes. So that's something to really keep in mind. Want to be cautious. Keep in mind, guys, if we do drop down to the next level of support, that would be the 200-day average. Definitely down there quite a ways, so please keep that in mind moving forward. Let's look at it from a technical analysis. IVV, let's look at our technical analysis and what we see with charts. We like to look at two indicators for technical analysis on the top-notch channel. The first indicator we like to look at is the derivative oscillator. That's these green and red bars here. When green bars are up or moving up, price is moving up. This is price up here. Price tends to move up. When the green bars are moving down or into the red going way down, price tends to go down. So that's our first indicator we like to look at. The second indicator we like to look at is the price percentage oscillator. That is the blue line here. And then we like to look at when it crosses the moving average, which is the red line here. When blue is above red, price tends to increase. When blue goes below red, price tends to decrease. Those are our two indicators. The only other thing we like to look at is Bollinger Bands, which are these bands here. Typically when price is outside of Bollinger Bands, it tends to move back in to the Bollinger Bands. Think of this as like basically price inside a bubble, and it has to have air inside this bubble and stay in the bubble in order to function and work properly. Very rarely do we get outside the bubble for the most part. So those are the three indicators we like to look at on Top Notch, and based off those indicators we like to make price decisions. We look at long-term and short-term charts. So when we look at long-term charts, that's what we think charts will be doing in the long-term basis. And then we also look at short-term charts to see what shorts we might be doing in the next 2 to 4 weeks. So please keep that in mind when making your moves, especially you TSP investors who only have 2 moves per week. If you have questions, please write them in the comments below. Let's start the technical analysis. So for IVV or the C Fund, S&P 500, long-term charts, weekly charts, where do we sit, guys? Well, what do we see on this chart? We see this really big decrease here, guys. Look at this derivative oscillator. It is really dropping off. These green bars are really going down. We got 4.63 2 weeks ago, 3.1, and then now at 1.3. So real big drop. Our PPO line, which is this blue line, is starting to drop below this red line here. That is not a good sign. If we have two negatives in the sign, 2 negatives next week, that would be a real bad sign for charts. Price, this is the second week of negative returns for the charts. Not good for IVV. Not a chart you really want to be in for a long-term basis. Let's look at the short-term basis for IVV. Again, another real interesting thing here, guys. Price was moving above here just for a week or two, and then it really dropped off. Price percentage oscillator, blue line dropped below that red line. Our derivative oscillator is back in the red, guys. Not positive. We are in the Bollinger Bands, but this could move lower. Look how tight those are. Typically when Bollinger Bands are really tight, we see a big movement in price. With us being below the 50-day moving average, like I showed you guys on this chart, that is not a place I want to put our money just yet, because if we have a drop, we don't want to be unprepared for that. So we're going to continue to watch this chart. We're not really invested in this at the time being. We'll have to see where it goes from there. Let's move on. Let's move on to VXF. This is the small caps or the S fund for TSP investors or Thrift Savings Plan. What do we see in VXF? VXF this week, guys, is above its 50-day moving average. A little more positive chart here. We're trying to get above that 20-day moving average. We're not able to get above it. Overall, very constructive from this breakdown here. Kind of consolidating, seeing where things will go. Let's look at it from a technical analysis. VXF long-term charts. Where do we sit? As you can see, another very not positive thing here, guys. Derivative oscillator, green bars, moving down 3.7 to 2.0 to 0.8. All right, this could be the week, this next week upcoming, where we could break down or we could reverse course, but we would need to see this start to pull away, the price percentage oscillator, the blue line, pull away from that red line, or start to see the derivative oscillator, the green bars go back, the green bars go back up. Price is kind of just sitting here. A lot of indecision. As you can see, a spinning top, which means there's a line on the top and bottom of this bar. Not a lot of price action as people decide where to go for the long-term charts. Short-term charts for VXF, where do we sit? Also not positive, guys. Derivative oscillators dropping here, like on our other chart. And our price percentage oscillators, again, getting very close to our red line here. If we have a cross on both, that is not a positive thing. Usually when we see that, price goes down when we see both cross around the same period or time frame. And with price just so close to that 50-day moving average, you want to make sure that it holds. So we are holding off. We are above all markets, like I mentioned. We are beating the markets, so we are in a position where we can mitigate risk right now for the Top Notch channel. Moving on to international markets. EFA. This is the I fund for Thrift Savings Plan. Where do we see? Guys, another week of consolidation. Look at this. Ever since August, this thing has been consolidating for a very long time. It's going to break out at some point. It is above the moving average, so that is a positive sign, but it has not broke out yet. We trade the chart in front of us, so let's take a look at that. Let's keep an open eye on this chart. It looks constructive. Where do we see it on short and long-term charts? EFA, long-term charts, let's take a look at it. Also not positive, guys. Derivative oscillator is moving down here. Price percentage oscillator is slowly slipping here. Every week it slips just a little bit more. Not much movement in price. Look at how little these price movements are for EFA. People are very cautious on the long-term basis. Short-term basis for EFA, not good things either. Price percentage oscillator is getting extremely close to our moving average. If we cross here, guys, that would be a bad sign for this chart to get involved in EFA or the iFund. And our derivative oscillator is almost in the negative. We drop down to a 0.02, 0.2, guys. That is a very low reading on this chart. Moving forward, we want to be cautious. Want to give this chart maybe another week before we can start to see if this will bounce or if it will not. And finally, our last chart for today, guys, AGG for the Thrift Savings Plan. This is the F Fund. For those that are Roth brokerage accounts, please follow the ETF AGG if you want to buy this fund. Where do we sit? Also, a lot of consolidation for bonds. Typically, when stocks start to drop, see bonds start to increase. We are not seeing that on this chart. See some trend lines drawn in here. We're not above those. So that's not a positive thing. On a technical analysis, let's take a look at it. Short-term charts, long-term charts for AGG. Where do we sit? In the negative. That is not a positive sign. That's not where we want to be. Look how close these Bollinger Bands are together. Typically, when Bollinger Bands are close, like we see back here in February and March, we start to see big price fluctuations. So we want to be careful with that. Since this is in the negative right now, that is not a positive sign to be. Price percentage oscillator is below on long-term charts for bonds or AGG F Fund. Where do we sit on short-term charts? Short-term charts, where do we look? PPO line is just about to cross here, not positive. When that goes below that red line, that is not a positive sign for price. Another thing is our price percentage or our derivative oscillator is also dropping on this chart. Not a positive sign for AGG. Not a place we really want to be in the future. So where are we sitting on the Top Notch channel now that we have looked at all of our funds? Since we have looked at all the funds, where are we sitting on Top Notch? We are currently sitting in the G Fund or cash. If you are Roth IRA brokerage, I would definitely recommend mitigating your exposure to some of these funds right now while we wait for markets to just kind of figure out what direction they want to go. For those in the TSP or the Thrift Savings Plan, I would look into the G Fund or mitigating your risk a little bit to have a little bit in that G Fund. Remember, you only have 2 moves per month, so keep that in mind going forward. Overall, we are doing very well on the Top Notch channel. Even though we are sitting in cash or the G Fund, we are beating all markets out for the year. We are even above the F Fund. We are at 8.5% for the year, which is incredible. Beating all these funds here, doing extremely well, extremely happy for where we sit. We are going to mitigate our risk. We do have an election coming up, so keep that in mind. Please like, subscribe, or share. Always enjoy having you guys along for the ride. Thank you again for your support. That's another Top Notch video. We'll see you guys next time.